Hi, you're watching TheStreet.com TV. I'm Simon Constable, and today I'm joined by Catherine Virga. She's a base metals analyst at CPM Group here in New York City. Welcome back to The Street, Catherine.
Thank you.
I want to talk to you about copper today. When you last came in a few weeks ago, you said copper was going to go up, and indeed it did. Went all the way up from under $3.10 a pound up to $3.67. Now it's back a bit, around about $3.50. What caused the pullback?
Well, first, let's start why copper prices rose. Copper prices increased because, one, demand was notably strong. We had demand increases from China and as well as increases in demand on the London Metal Exchange, which was pulling down stocks. Now, prices spiked up higher than expected for a lot of market participants.
No, that was a lot higher than you expected, right? It was maybe about $0.50 higher. That's pretty interesting.
Because there was a series of supply shocks, and that was labor negotiations and actually strikes that did go on at copper mines and smelters throughout the world. Okay,
was one of those in Indonesia, the Freeport plant? Okay, great.
And right now we're seeing some market participants profit taking and going ahead and collecting some of their gains. Another factor is earlier this week we had the London's Metal Exchange, the clearinghouse, raise the margins for the copper contract.
Now, for our viewers, can you explain what the margin is and what it entails when the clearinghouse says we need more margin?
Sure. Well, when there's increased price volatility or prices rise, the clearinghouse does tend to raise margins. It's the amount that you actually have to have down on your future position in cash. So
if they raise that, you need to produce more cash.
Yes.
And did it go up a lot? Was it like a small rise? Or?
No, it actually rose a little bit more than 25%. So cash-strapped market participants and some nervous longs could have liquidated from the market this week.
Okay, so that helped bring the price back down to sort of 20 or so cents that we've come down. Now, do you see it going much lower than this? I mean, is this an opportunity where you jumping on the bandwagon and shorting some copper futures is a good idea, or what?
No, I don't think so. I think right now we're going to have the strong demand give us support to prices, so around $3.40.
So about 10 cents below where we are now.
And then it's going to be the supply shocks that really do bring prices up possibly in the future. So I think right now there's a potential for a strike in Peru next week. So we could have prices rise possibly tomorrow or next week.
Okay, so a lot of support on the price, not much hope for the shorts, a lot of upside bias here, maybe a chance to go long.
Yes. Yeah.
Thank you for joining us, Catherine.
You're welcome.
You've been watching TheStreet.com TV. Please stay tuned for more.